We'll start with the market's big rebound. The major averages finally shaking off that post-Thanksgiving coma, ending a three-day losing streak today. Are another new set of records around the corner, or is this rally just a flash in the pan? Guy?
First of all, no, just not welcome.
Thank you.
I'm a momentum killer. I just dropped the hammer on momentum. And, we wear these things in our ears. You're familiar with these things? They call them the IFBs. And they just told me, you hear the bell? They told me in my ear that your name back at HQ is C. Quint.
C. Quint.
So we might just take the C. Quint thing. So, Quint, to answer your original question, no, I think today was a flash in the pan. I think December 15th comes. I think the president levies these tariffs. I think the market goes down. I would think the S&P trades down to 3030, which is basically 90 or so handles from where we are now. And then we'll have another conversation. But I think today was a bounce into a market that's been down 3 days.
Steve-O?
I agree with that, but I do believe that the market will bounce back even in the last 2 weeks of the year if he puts on the new tariffs. So I agree with that level too, 3,000 roughly in the S&P. But the market, who wants to sell this market? Long onlys want to be long. Long short hedge funds will underperform if the market trades lower. So momentum is still on for the year end.
I think what's interesting is I would say who wants to trade it? I mean, if you think about what we've had day over day, so the SMH is now up 1.5% today after being down 1.8% today. So these headlines are impossible to read. But what you can read is the data that was out this morning. So you had ADP numbers, which clearly tell you, whatever you want to say, we talk all the time about the U.S. consumer. I'm not telling you the job market's falling out of bed. But again, the 3-month average, the 6-month average, the 9-month average, that trend is down. You've got jobless claims tomorrow. I think it's a pretty benign indicator typically, but we've had 2 straight weeks of really terrible jobless claims, and you have a payroll number on Friday. And I hate to be, playing the role of Dan Nathan here. Dan, wherever you are, it's Danny Downer.
Phoenix, I believe.
But I mean, if you look at that ISM services number today again, so for people that want to point out, and I would guess that Guy is in this camp, look, the macro isn't doing anything to get you excited. I agree, however, with Steve that ultimately, as we've been saying, trying to game trade war rhetoric has been a losing battle, and that the market wants to go up. And if you look at bull-bear sentiment, the Bills still seem to be in charge.
Although the global, when you look at the manufacturing PMIs, they've been getting a little bit better, right? So, I mean, that's something I think when you look at the bigger scheme of things. But when we look right here at the United States, we have a strong consumer. And let's just think about this for a second. The president's kicked this down the road many, many times. This last time, he kicked it all the way a year out, right? Mm-hmm. And our big reaction was we were down 280 points.
Right.
So because of that, I think you have to be a little bit more conscious of the idea that we've had a very interesting and a very successful earnings season that we've just gone through. That's been very strong. And because of that volatility moved yesterday, and it moved the last couple of days, Monday, Tuesday, pretty strong to the upside. But when you look at that, Carl, we got up to a 17. Okay, 17. That means a 1% move in the marketplace. That wasn't a 20 or a 22.
Average.
Right.
Yeah.
So when you look at it from that perspective, okay, what happens December 15th? Well, there's a really good chance that we kind of kick this thing around again. We probably don't get a whole lot done. Maybe there's a phase 1. I'm not even so sure how big phase 1 is anymore in terms of the markets. Now, it would give it a little bit of a positivity to it. But outside of that, Carl, I think this has more to do with...
Who's going to short the market, though? I think it's genius, the fact that he divided this up into phase 1 and future phases. Because last year, we probably made more progress on trade than we did this year, yet the market screamed higher. So people are nervous about shorting it ahead of a trade announcement. How could you do that? You're going to get run over.
Except for the fact that until yesterday, we thought we had a trade announcement. And if you look
phase
at...
Phase 1, though, still. Phase 1.
Yeah, but again, phase 1 was even pushed out, and the market got spooked, and you'd had the S&P that had rallied...
But it was a minor spook. Right. I'm not trying to interrupt you. I'm just saying... When you think about the move,
3% in 24 hours. You're not spooked by it.
And the volatility didn't tell me that the world was spooked by it either.
The more important thing to me is that the S&P had run 10% in 41 sessions, and that to me tells me that the market feels pretty good about a trade deal. And yeah, I agree with everything you guys are saying. This is a hiccup over the last couple of days. We've seen this so many times in the last year that that's not something you should be trading on, and I think that would be scary.
Yeah, I mean, earnings were good, but I mean, earnings growth is definitely slowing over the last couple of years. There's no denying that. I mean, again, the president's a wild card. December 15th is absolutely out there. there. The globe might be improving, but it's improving off a level that's pretty miserable. That ADP number was the worst, I think, in 9 years. I mean, people think the Fed has their back. Maybe so.
The business activity component was the worst since 09.
Which is pretty remarkable. I mean, it's 10 years. Think about where we are now. So, listen,
you just said something there. The Fed has their back. So if that economic data continues to get worse, you could have a Fed that becomes back in play, even though they have a limited amount of ammo going forward.
Do we agree with that? We think we're more likely to go into an easing mode than a hiking mode. Right?
I think the risk is to ease, not to hike. I think the Fed is probably out of, right now, based upon even just if we had static data, they're out of commission until the middle part of next year, I think.